if I had to give advice for anyone who's going to launch a token as part of a capital raise or, part of their business model, like take that really, really seriously because you're effectively going public from the minute you launch it.
This is Funded, a show where founders who raised millions in venture capital share the gritty side of what it actually took to get that money in the bank. I'm Jason Ye. Not too long ago, I was trying to get my ideas funded. And back in the day, I was a VC listening to founders pitch me for money. What would you do if your big idea required you to convince investors to bet on an entirely new way of doing something at a time when the rest of the market hated your industry? For JP Mullin, co-founder of Mantra, that wasn't just a hypothetical. It was the reality of building a platform designed to bring real-world asset tokenization to the blockchain. In the middle of a market downturn, when most people were stepping back from crypto, JP was leaning all the way in, betting that real-world asset tokenization would be the next big thing in Web3. Raising capital for something this ambitious is never simple, but it's especially difficult if your company is in Web3 and it's a crypto winter. Investors were skeptical, the market was uncertain, and yet JP managed to land an $11 million fundraise led by Sharuk Partners. Today, we dig into what it took to convince investors, how JP tackled the unique challenges of token and equity fundraising, and the lessons he's learned scaling Mantra in one of the most volatile markets out there. But before we get to all of that, I wanted to jump into JP's early years, where a series of pivotal events set him on a path to building something big.
So I think when I was younger, I was a pretty outgoing, like super sports driven, very athletic, just kind of like I was friends with everyone, like good student. But I was not, I wasn't until later on, I didn't really ever have to try in school, to be completely honest. I just kind of like coasted and it was easy. But super, super adventurous. I mean, I was always into like nature shows and like, I remember when we would travel a little bit, but like when I was younger, we'd travel just in the US. I don't think I left the US until I was maybe middle school or something like that. Which is still maybe early for some, but anyway, we went down to Epcot in Disney World in Florida. And, and I remember like, that was my favorite part of all of Disney World was like all these like different countries that I could go to. And that was where I had like sushi for the first time. And that's where I had,
Sushi at Disney World.
all these different cuisines. Yeah. But like for a kid from Cincinnati, Ohio at like 12 years old, that was weird, And I was really like different countries, exploring different things. And I think really early on, I just lived in a bigger world from that perspective.
Yeah.
I always just kind of did my own thing. And I think people recognize that I did my own thing in a very genuine way. And so it wasn't like it was forced.
Yeah.
So I tended to be a little bit more like, I don't want to say like trendsetter, but like I was into stuff that people thought was weird that then eventually became kind of cool. Does that make sense?
Yeah.
Like music and like, I was always, I remember in high school, I was always wearing like strange outfits and had like crazy clothes, like weird haircuts and like all kinds of stuff.
Where do you think that came from? Was, were your parents, kind of out there? Were they entrepreneurs?
Dad was in the Marine Corps.
Oh my God. Wow.
My dad was in the Marine Corps. My mom was a Midwestern stay-at-home mom. She worked a little bit, but like very normal, like middle class Midwestern upbringing. Yeah, I mean, they were always super supportive of me and my sister. I had an older sister. She was like, my dad he was in the Marine Corps, but he was also in like banking. So, so like, had a bit more of like that kind of like finance job as well. But she was into like acting and theater and super creative. And we just both kind of, were able to do what we wanted to do within reason, but like we're able to follow our own path. And, we had some rigidity to like, I remember I was never able to quit anything until I finished at least the season or I finished something, I was able to follow through, which I think was important. But it wasn't like they were like, you can't do this or you can't do that. you need to do this or whatever. They kind of let us figure our own self out, which I think was, great.
Yeah. So with that sort of supportive structure background in right the Marine Corps, it sounded like you went through
Mm,
sports, but you
yeah.
did, kind of what you wanted to do. You did it on your own
Yeah.
terms. Coming in through high school and maybe looking out through college and beyond, do you remember having
Mm.
a vision for what you would be spending time on, where your career might go, or did you kind of just flow with the wind?
Yeah, definitely did. So up until, and I had some like kind of very, traumatic isn't the word, but very like specific moments in time or life that like really shifted a lot for me. So in high school, I mean, I was really, really into sports. I mean, like I was going to play probably Division 1 lacrosse, on scholarship, maybe even football, to be honest. Um, but I ended up getting like, I think my seventh or eighth or ninth concussion in football, like right around the time when like CTE was becoming a thing. So it was like, really a big issue. And I got that in my senior year of high school, like the second game of football. And I had
Wow.
been like all city the year before, like coming out of and basically nowhere because I'd changed schools. But um, pretty much that changed everything. So I couldn't ever play like contact sports again. So like had this kind of really, I would actually say back then it was quite a traumatic thing, although I didn't really realize it. Because being a 17-year-old kid whose whole life revolved around athletics,
Yeah.
and then like that shifted everything, and I couldn't do it anymore. And it wasn't like I had like you know a knee injury where you could see it. I had like a brain injury. So that was a pretty interesting thing. I remember I had like a headache for like months, just constant, and like probably a little bit depressed, but I didn't realize it. I'm just not that kind of person. I'm a very optimistic person. So anyway, that had a big shift, and that kind of like ended up making me go into a little bit of a different path that I may not have gone down. Ended up going to school in Madrid, in Spain.
Sure.
So like I had a buddy from my previous high school who was from Spain. His dad worked at Procter and Gamble, so that's how I got to like meet him back in Cincinnati, Ohio. And I went to visit him one summer, and I was like, "This is like the best place ever." So I started looking once I couldn't do athletics and sports anymore. I was like, "Okay, well, why don't I just go to Europe? I'd rather over there. Looks a lot looks more fun than what I'm doing
Yeah.
here." So I ended up finding that I could go to American University in Europe, in Spain, in Madrid. Um, and I wanted to study international business. I didn't really know exactly what that meant, but like my dad was in finance, so I was like, okay, finance, business, banking, whatever, I'll figure something out. So that was like the trajectory. I didn't really think about entrepreneurship really. I
Right.
always wanted to be like I always wanted to be like a people manager or boss or however you want to think about it in that context, just because that's what my dad did.
Yeah.
And I kind of gravitated toward
Captaining.
that as
You're
like
probably
just
captaining
naturally.
some teams.
Yeah.
You're saying a few things that portends an interesting future, right? You talked a little bit about always kind of you know following the beat of your own drum, if you will,
Mm,
doing things in your own terms, doing things that weren't super popular, and then you mentioned super optimistic person, right? These are all kind of leading
yeah.
yourself to being able to work in an
Yeah.
industry that we'll talk about in the future. There's one question that I like asking founders in this part of the conversation, which has almost dual meaning for you. But
Mm.
do you remember what your relationship with money was like growing up? Like, where was it weird to ask for it? Was it did you always feel like you needed it? What was that relationship like?
That's a very good question. I was always like I think I always wanted. I didn't really care about money per se, but I did always want the new shiny, like the shiny new thing. And honestly, that just is like, I think kind of unpacking that later on in life, um, like working with one of the coaches that I work with, Celine, from Mashari Method. Like I am hyper achiever, and like it's always kind of like what's next. So I think that translates into like tech and gadgets. I've always been into tech, so
Mhm.
always want the new iPhone, or always, even if it's ridiculous. I get a new iPhone every year, which is kind of ridiculous. um,
You mean you don't have
just stuff like
an
that.
iPhone Mini? You don't have an iPhone Mini?
No, I definitely do not.
Knowing JP, my
um,
old relic.
so like, I think from that perspective, like that's kind of been one thing. I never really had. it's never really been the motivator. And, I think, kind of translating particularly into now, I mean, I like being in crypto from a fairly early age, being entrepreneur fairly early age. Um, I actually made a lot of money and lost a lot of money twice, like before I was 30. I mean, millions both times.
Yeah.
Um, and I was really no happier when I had a lot of money than when I didn't. I mean, I think it's just for me, it's a factor of like, can I be comfortable? And does it give me the ability to be more efficient with my time?
Yeah.
And if those two things are ticked, and like, sure, I'm look at the background here. I'm like, definitely, I collect things, right? I like to, like, I have little objects and I like, you know, those type of things, but it's not like what drives me to like work hard. I would work hard regardless.
Yeah.
And I would do what I'm doing regardless, just because I like enjoy my job, enjoy
Nice.
the thing that I'm working on.
Okay, so the relationship with money is an interesting one, um, especially because as we'll find out, and we can kind of fast forward. I think you go into more of a standard career before shifting over to being pretty early on in crypto, right? So
Mm,
crypto was a space that, from what I could tell in your bio and background, you were dabbling in, you were spending time in. I want to fast forward though to the start of Mantra, right? Your current company,
mm,
a company who you recently announced an $11 million raise for. And
yep.
the timing of what you were doing is like fascinating to me. Um, like I don't think your timing really lined up with some of the like easier times to be in market. Um,
Mm,
and the thing that's even more fascinating for me, and I think a lot of the listeners have funded, are that crypto dynamics are slightly different than sort of high growth technology startup dynamics. So, what I'd love
mm,
to talk a little bit about is maybe the starting point of Mantra from the perspective of what is this a company that you're building? And when you think about building a crypto native DeFi platform,
mm.
is there an idea of, is there even a concept of bootstrapping in this space? Or are there dynamics around that like make it impossible to bootstrap? And so maybe you can start quickly with 30 seconds on your description of what Mantra is, especially in the beginning, and then tell us a little bit about
Yeah.
that initial thought of how do I capitalize this company?
Sure. So I think it's funny because, we started, well, not started, but we were kind of going through the raise process as we were doing fundraising conference together.
Yeah.
So you really got to see it firsthand. And it was interesting to see how like some of the lessons that we were learning from, or I was learning from that process from you, like really just translated into real life, like immediately. And like, it just coincided that it all came together at the same time, which was kind of cool. Um, I would say that, Mantra in the last 6 months, pretty much since we've kind of got to know each other, has undergone like dramatic change, um, incredible growth. And just kind of like, it's been probably the craziest 6 months of my life. Shifting constantly. We're hiring like crazy. We're raising more money. It's a pretty insane time. But the way that I describe Mantra now, actually, it's interesting because the business itself is very different if you look at it from like the traditional lens of like, okay, what's the equity company mantra mean? Or if you look at it from like the crypto side. And if you look at it from the crypto side, mantra is just a, layer one blockchain solution focused on tokenization. So bringing real world assets on chain. Um, but if you come through it from like an equity lens, it's a very different thing. It's like a
Hmm.
diversified group with different types of products and like, licensing and, and a bunch of different things. So that's definitely one thing I think maybe is interesting to unpack here, just because when you're talking to investors, like now I'm selling tokens. Like that's the round that we're doing today. That is
Okay.
a very different pitch and a very different deal than what I was doing when we got to know each other a few months back, which was equity group level. Like, how does this all work? What's the big bit? Very
Yeah.
different game.
Let's
Um,
let's not rush through that. Actually, I think this is kind
sure.
of where I want to spend a lot of time. So we can talk a little bit. Let's focus on this $11 million raise that you
Sure.
announced. Um,
Yep.
it's and I'll tell you what I believe in, like the fundamentals that I understand within companies, which is like
Sure.
uh, describe the company, describe the problem that you're solving, describe it as a really big opportunity because venture capitalists need to see, between a 10 and 100x, especially at the earliest stages. And then describe your team as being the ones that can actually get it done. Overly simplified, but that's exactly what we
Yep.
think about happening, right? And I'll say this, when you were going out to raise end of 2023, like when you were like pulling that together, might have been one of the crappier times to be fundraising
For sure.
for any company, but crypto
Yeah.
was not doing well.
Yeah,
Um,
for sure.
Now you're saying you went out to raise for that, but then there's another layer on top of it, which is tokens, right? So
Yeah.
tokens which are ascribed some sort of value. And maybe you can
Yep.
take it from here. Maybe I can pass it to you and you do your best to describe. So what is it that when you fundraise for a token, what are you promising or what are you trying to tell the investor that you're going to be able to do and why?
Sure. Um, so I think in our case, our token is representative of, a a layer one blockchain network. So like similar to, I mean, we're not trying to be Ethereum, we're not trying to be Solana or any of these big guys. We have a specific use case for our chain, which is asset tokenization. Um, but it's effectively the same idea of paying gas for transactions, and you've subscribed some sort of value accrual back to the token via this like the more value that comes onto the network, the more usage of the token, the more apps are built on top of it. There's this idea of like this fat protocol thesis, whether that's, you know, legitimate or not. That's
And
kind of the
wait,
idea. So
and
like,
assuming that funded listeners are less crypto native than others,
yes,
let's just describe a couple things specifically. So, layer one blockchain, as in built on top of the main sort of blue chip protocols.
no, so it's like a base layer infrastructure. So like things build on top of us. And I think that's actually a very important thing because like particularly when markets are not as good for fundraising, at least in crypto, but also probably in probably in just traditional VC too or traditional tech. Like they go to B2B plays and the VCs go to B2B plays and they enterprise and they go to infrastructure.
Mhm.
And that's basically in the crypto translation, like that is a layer one.
Oh, I see. So
Things
you're
are
an
built on top of
alternative
it.
to
It's a bit
saying alternative to Ethereum then.
exactly.
Got it. Great. Okay.
Yeah,
So you're an alternative to Ethereum. And you talked about this concept of because I'm trying to overly simplify this.
sure.
You are telling the market that there is going to be demand for your token, right?
Yes,
And you're trying to explain the mechanics around why there's demand for the token, right?
absolutely.
Like what is drawing people to want to use your token, and what is the story that you're
Sure.
telling people?
For sure. So, honestly, a lot of the reason people buy tokens is just pure speculation.
I
Um,
appreciate the honesty. So
it's
keep going.
yeah. I think people expect that in 5, 10, 20 years, the crypto industry, tokens in general, will be more valuable, but they'll be more ubiquitous, they'll be more widespread. And people are placing bets on projects that they think will be there that are going to accrue some of that value, whether it's through the general market growth or due to the delivery and execution of whatever promise you're making or whatever, your narrative is. And in our case, our thesis has been this for a long time, but our idea is that we want to bring traditional assets, different types of products on chain that currently don't live on a decentralized or semi-decentralized blockchain network or ledger, increasing accessibility, increasing like fairness and equity across people being able to interact with these types of products that may not have been able to access before. And this is kind of like the thesis that people are talking about right now that's really hot narrative wise is called RWA, real world asset. So we are effectively the number one real world asset blockchain right now, that's specifically geared towards this. There's other general purpose chains like an Ethereum or a Solana, but we're like a little bit niche, even though our niche is like the entire finance
Yeah.
industry, like the big niche. So people are basically saying, okay, asset tokenization is a thing. The technology is here. They're a first mover. They're uniquely positioned. And if you look at just like we have a public token, so there's like an actual like the market actually prices us.
Yeah.
I think today, I think our fully diluted market cap is like, 650 million or something like that.
Wow.
But we're actually expanding the supply, so it'll actually be closer to like 1.3 billion in later this year. If all things stay the same. But basically, what people are investing in is they're saying, okay, today, like we're in the top 150 coins in the market. They're expecting that if we continue to execute on this vision, we can maybe be top 20, top 50. So they're kind of like, it's almost like a relative value trade, which
Yeah.
where you have that ability to look at comparables because it's a public market, right? So you can say,
Yeah.
okay, this is the next, Ethereum or this is whatever. A little bit different when it comes to applications because there's just less comparables in the market. It's more like,
JP, I'm going to pause you there because I want to make sure certain people are sort of following us in lockstep. Again, the reason I was
mm,
very excited to do this is because I think there are a lot of people in technology in our ecosystem that haven't been exposed to these dynamics, and they kind
sure.
of only know the idea of like, I have some money on Coinbase, certain things are going up.
Yeah.
But when you describe raising capital for your token, and
Mm,
I, again, really appreciate the transparency and honesty where you're like, well, what are people betting on? And you're like, I think it's safe to say that a lot of people are speculating. What are they betting on? They're betting
mm,
on the fact that they believe it'll go up, right? They
yeah.
believe that the value will go
Pretty
up.
much.
And I think a lot of
Yeah.
people outside of crypto can be like, oh my God, that's why it's like such a bad fake industry. People are just like
Yeah.
stealing money from people. But you know what dynamic, you know what market that exists in as well? That exact same dynamic is the NASDAQ, right? Is
Of course.
the New York Stock
Exact
Exchange.
same thing.
When there is a public liquid market, these movements beget movements, right? They one movement
Yep.
pushes the movement and it keeps going. And
Yep.
the thing to consider there first is there is a one-to-one correlation between public markets, where public market equities, which are representative of corporations, are driven by similar dynamics, right? And
Yep.
you are going to the market saying that there is a fundamental value of what you're trying to produce, but you're
For sure.
also open with the fact that, by the way, part of this dynamic is pure speculation. So that if
Of
people
course.
can believe that we're able to push the price of the market, price of the token up, then that will get more people to be interested in actually buying the token, which with a limited supply and demand, will also
Mhm.
continue to push the price of the token. And
100%.
before I leave this, I did want to tie it back to the space that I'm more deeply aware of and the stuff that we usually talk about, which is private market fundraising and dynamics
Mhm.
there. And while very, very different, same dynamic exists there, just at slower speeds,
Mm.
right? Because
Yep.
if you think about it, a lot of, especially in the hottest markets, but in almost every market, we are betting on some kind of future. We are saying, can Mantra be the next conglomerate, DeFi protocol, whatever, and be the
Yeah.
thing that continues to print cash flow from operations?
Mhm.
But if I'm investing in you at the seed, JP, I'm hoping that at the A, somebody will price it up, right? Like that
Yes.
we're
100%.
investing now because we think it'll be higher later. And so
Yes.
I just want everyone to kind of call a spade and be aware that in any sort of market dynamic, we're all playing a similar game. And it's good to hear a little bit about
Yep.
how this worked out. Okay.
100%.
Um, so let's talk about some specific dynamics, and maybe we can talk about stories and how it all worked out. But
Sure.
you're going out to raise the end of 2023, beginning of 2024. I looked at the Bitcoin charts. Like we're sitting at something like 60 some right now. And in early
Yeah.
2023, we were in the 30s, right?
Yeah.
So like a very different market. Tell me a
Yeah.
little bit about what you learned going out to fundraise for Mantra then. And, some of the stories about, again, we're trying to, whether or not you're raising for equity, it, that's the side of the world that I know where you're raising for tokens, you're telling a story, right? And
For
we're
sure.
at a place in the market where people maybe are not ready to hear these kind of stories. So tell me a little bit about what that felt like. Hearing JP talk about selling equity versus tokens highlights a lesson I think a lot of founders miss. Your story needs to adapt to your audience. Investors, whether they're buying equity or tokens, want to know you've got a clear path to value. That never changes. After the break, JP shares how the focus on storytelling helped Mantra lock in their $11 million raise led by Sharuk Partners. There are a ton of easy-to-make mistakes when growing a startup. I feel like I've either made them all myself or seen them all as an advisor and investor. One super common one is waiting too long to bring in expert help around managing company finances. I get why that happens though. You're not a tiny company anymore, but you feel like you're not big enough to have an in-house finance team and don't want to waste money. My advice to you is to avoid the mistake of just winging it. This is not a time to fake it till you make it. At least talk to someone early so that you can hear about how the additional help could actually save you money and improve your operations. If you're looking for recommendations on who to talk to, check out Propeller Industries. They've worked with hundreds of venture to growth stage startups, so have a ton of deep knowledge to help you avoid major bumps and set your company up for success, whether it's talking to investors or planning for future growth. Set up a free call by going to fundedpod.com/propeller. That's PROPELLER, and tell them we sent you. They're giving Funded listeners a one-time $2,500 new client credit if you work with them for 3 months.
Yeah, for sure. So, I mean, we actually started looking to raise equity back like probably spring, summer-ish 2022. And that was even worse time. I mean, I remember being in New York City in our general counsel's apartment that he was renting there because we were kind of stuck out of Hong Kong. And we were like working on the deck, and like Luna, which is obviously like one of the big, shit shows of the last cycle, was like imploding, like literally as we're working on the deck. And then obviously everything else that unwound from that, you had Three Arrows, a big hedge fund that blew up. You had FTX, which was, blew up massively. You had all these things that kind of like just really put a damper on the space. And, people didn't think it was going to come back. I mean, I knew it was. I've been through multiple cycles. I'm like, this happens every time. It'll be back. You just kind of survive. Anytime we started to get a little bit of traction, like, things started to kind of tail off a little bit after Luna, and we're getting some traction, and then boom, then FTX happens. We're like, oh, great. So it was a struggle. I mean, we had to, restructure. We had to. I mean, I didn't take pay, or I put a bunch of money into the business myself actually for nearly 2 years, just to kind of get through, and it was not easy. I mean, like fortunately towards the end of it, it started to kind of like tail off a bit, and we were like kind of making progress, but we're never to ever like generate that FOMO with a big lead. Everyone's like, oh yeah, wait for lead. And finally we were able to get like the semblance of a term sheet, but it took longer than, what we were expecting. And it wasn't like as much as we wanted. And then as we kind of got to know, like literally as I'm going through the Fundraise the Confidence program with you and the team, all these conversations start happening about like, hey, we're interested in what your guys are doing. And it was just kind of like almost circumstance. It was really like serendipitous. And we ended up basically meeting our current lead investor because they were looking for a real world asset blockchain. And they actually wanted to like basically take over our token that was listed on Binance before, just to do that project. And I was like, well, why would you take it over? Like, we have a team, we've been building this already. Like, let's just join forces. And it ended up being like a match made in heaven. We worked together like great. They're like amazing partners, super institutional capital. So it really like, it felt like it all just came together like, perfectly, but it was really a long struggle. And even at the end, I mean, it wasn't easy during the final process to get it across the line. Anyway, I mean, there was like a substantial amount of due diligence because this fund is backed by like 9 sovereign wealth funds. So they have to go through the really kind of deep dive on things, which isn't easy for a crypto company, I would say, to do in general, because it's a little bit complex.
Yeah.
We're like, I think they gave as much as excited as they were about like myself, the team, the opportunity, like they also understand that we're probably the biggest risk in their portfolio from a non-crypto native VC investing into a crypto company. And that is like not something that they take lightly, right? Because that could blow up their entire like fund.
Well, let me jump into this because like this is a really interesting part of the story. You're a crypto native company, your lead investor in your Series A, you just described as non-crypto native. So I think one of the interesting things maybe to share is how did you even get the initial contact point there? Like, what was the intro? It was I mean, I think you
Mm,
yada over it a little bit, but like it
yeah,
couldn't have been like completely random. And I think people hearing how this
definitely
all
not.
coalesced should be at least directionally inspirational.
Absolutely. So, well, hopefully. I mean, so we had actually talked to the fund. So there's the fund, the main fund, which is called Sharuk Partners. They're like I call them Web 2.5 now. Um, then there was a fund of funds called 3 Point, which is kind of like meant to be the crypto arm of Sharuk, because obviously Sharuk has like all these sovereigns on the LP cap table. So they kind of like hived off a crypto fund in the beginning just to like get some exposure without the LPs being like, what the heck? It's kind of like if it goes bad, they can just cut it,
Yeah.
kind
Yeah.
of thing. And we had actually pitched them like 18 months previously, and they had
Mm,
passed. Or just, yeah, I mean, they didn't really pass, but they were just like, okay. And ended up basically being that we got introduced from a friend of mine who I've known for a long time, who happens to be someone I play fantasy football with, but I've known him for, I've known him for amenities in the space. We do like, he does OTC broking. And he was like, you guys should talk to these guys. They're looking for a Binance listed, token, low cap, whatever. And we had a couple different offers coming through that actually ended up having to know each other. It was really strange. We had like all these offers coming to buy us out. And I'm like, I'm not really looking to sell right now. I kind of want to keep doing this, but I'll definitely, hear it out. And we kind of got on the call. And it's funny because at first they kind of like brushed us off a little bit just because for whatever reason, not even brushed us off, just like didn't respond immediately. But I followed up and said, like, hey, we have another offer here. Just FYI, like, if you want to let these guys know that they're not the only game in town. Great. And that was like a little bit of, like try to get some competing forces at play. And
yeah.
they got right back to the table, got on a call, and it was literally just like I met with the partner Kunal, and just I mean I remember him saying something like, "Wow, this is great! You're exactly what I was looking for. This is perfect," and or something of that line. And honestly, it's been just like I said, it's just been a match made in heaven. I
Yeah.
mean, not just with the fund, but with the people involved. Like they've been super supportive, really, really great for like my learning and maturation as a founder. So it's been just like a really, really incredible experience, honestly.
Yeah. The thing that I want to point out here is like I think you kind of overlook how important that story is,
Mm,
because people will look at your Crunchbase profile and be mantra $11 million Series A, and it just feel like it all worked out, and even part of the story.
yeah,
But the lead up to it is that you pitched an affiliated firm or that firm something in that ecosystem 18 months prior, right? And they
yeah,
passed. And I think
yep,
this is one of those things that I really underline for a lot of founders that is that in many cases, these relationships take time, right? These
for
relationships and
sure.
these like data points that allow an investor to say, like, we kind of know this team. We know JP. We heard about them 18 months ago, and the things that they
Yeah,
said they were going to do, we weren't ready then. We passed them, but the things that they said they were going to do in the in the like bear market, the sort of worst time, and they kept building, and now they've come out the other side. They're actually legit. They say
yep,
what they are going to do, and they actually did it.
for sure.
And so when you actually get back to them through another warm connection, right? Adding
Yep,
on to the social proofing, it's just a number of things that people can point to because at the end of the day, JP, it's like you're telling them a story. Remember, we just said you're telling them a story, and there isn't a lot that they can do to say with 100% certainty they are going to be this. The best they can do
yep,
is use the data points they have, which are things, the relationship that they built with you before, other vectors in, other pieces of credibility, other social proofing. And so, yeah, I mean, I would just encourage people to hear this and be like, look, got to have a lot of sticks in the
sure,
fire. You got to be out there.
for
People
sure.
have to know who you are. There needs to be awareness.
And
So,
we had someone pass 4 times, 4 times,
and then invest.
and now they're yeah, and now they're honestly one of our biggest supporters. Like
Wow.
it's crazy. So like you just got to keep pushing sometimes. I mean, I would echo that fact that the no doesn't always mean no in this case. And it might just mean it's not the right moment. You're not at the right stage for us. The
Yeah.
narrative isn't fitting with our thesis at the moment, but that could change. And
Yeah.
keep those doors open. Don't ever close those doors. Because also you never know. Maybe these guys go out and start a new fund and their thesis changes as well. So like keep a relationship irrespective. I will say this. I think I was having a, a, a podcast or like a quick interview with Michael Hauk. I'm not sure if you know Michael.
Yep.
And he was asking me a little bit about fundraising as well. And I said something along the lines of like, take it personal when they say no, but don't actually take it personal. Like there could be a number of reasons why they pass that has nothing to do with you
Right.
at all. Now, nothing to do with your business even. I mean, they might like you, they might like your company, but it's just not the right thing for the fund. And there's, who knows why, in many cases, why they end up, saying no, or pass for the time being. But so don't take it personal in that regard, but take it personal from the factor of like, I will never forget anyone who ever passes, ever. I don't hold it against them, but I will absolutely use that as a chip on my shoulder and motivation for the next time.
Yeah.
So that's kind of how I view it. And, but that doesn't mean that I wouldn't allow them later. Cause obviously if you treat it with respect and like, you're open
Bring it
about
back.
it, there's ways to do it properly that are, it's not like just being an ass about it.
Yeah.
That
Well,
also happens, but
you talked, I mean, you're talking a little bit about the no's and the passes, and
mm,
we have like a really positive 6 months, over the past 6 months with Mantra. But you talked about having to fundraise during crypto winter, right?
mm,
When, I mean, it went from the sexiest thing in the world to maybe being laughed out of rooms or people being like, why the
yes.
hell are you still in this space? Why haven't you pivoted to the next thing?
I,
And so I wonder if any like noticeably painful memories come to mind when you think about fundraising in particular, any interactions or parts along the journey that like still kind of you think back and be like, oh my God, that was bad.
um, No, I will say something slightly different. I think even now that we're like it's attractive and it's back and whatever, you still get a lot of no's. Like
Yeah.
you could be like still the most attractive thing out there, and you're still going to get no's. So like just be ready for that. Um, a little bit more on the question. I think the most painful part of the process for me was like really kind of getting strung along for consistent like documentation and diligence and things of this nature.
Sure.
When I know it was well intended, but it like they didn't even end up coming in at the end. So um because they actually just missed the opportunity. So I think like we didn't have room.
Yeah.
So, it was a little bit of like I'd rather actually be a little bit more respectful of the time and
Yeah.
just if you're not going to do it, don't do it now and just let me get on with it. Cause like stringing it out makes it just like, oh, next week or, that's the
Yeah.
painful part. That's the,
On the,
that's the worst part.
on the flip side of it, um, do you remember where you were when the lead partner at Sharuk kind of let you know, like, hey, we're actually going to do this? Was there like a definitive time and place or like a communication that sticks in your mind?
Um, it's funny. Like, so kind of how it worked out was at the end of the year, um, like we were having some calls with these guys, and then I remember I was going out to Dubai a couple times to, finally like meet everyone, and we actually like agreed terms like the first time we met, basically, and we kind of stuck to that throughout the entire thing, and I think they honestly respect me for it because as the market moved and things changed, like I could have definitely repriced
Yeah.
um, significantly, and I didn't. I think it's really important to like kind of stick to your word. Um, and I saw them as value added partners, so like we wanted to, it's actually my job to make sure that my investors make money, in my opinion.
Yeah.
I want them to, and when like going through all that stuff, it wasn't ever really like in doubt in my mind for some reason. So I remember maybe after the first week, like I think I maybe went back and forth two times. And I just remember knowing that it was going to happen, even if it wasn't really confirmed. And I remember getting back on the plane from Dubai to Hong Kong, and I was just like crying the whole plane ride. And just like happy tears, like, oh my God, we finally did it. And we hadn't even done it yet. It's just kind of funny. We still have to go through all the legal due diligence, we still have to go through all the financial due
It's
diligence,
that
but I just knew we were
optimism that
going to
you
do it.
talked about,
Yeah.
it's like that
Yeah.
optimism that just flows through you. That's awesome.
Yeah,
That's a good memory. Um,
for sure.
and of course, like they end up coming in. I think you had a good sense. Having been through equity raises and now token raises, you've
Mm,
definitely seen a lot, and you've kind of started adapting your own approach to fundraising. When you talk to founders who are thinking about fundraising, whether or not they're sort of crypto native, like token associated companies, or maybe just more
mm.
traditional equity based fundraisers, are there any piece of advice or things that you're like, man, I wish someone had just helped me understand this before I ever went down this
Mm.
path? Any key lessons you like sharing?
That's a good question. I mean, I think the one of the best things that I have always taken into consideration is like the ability to play both equity and tokens and kind of optimize for what's working at the time. So like that's an important kind of construct. Like I want to optimize my cap table at both the equity level and at the token level because there's a different group of investors. I mean,
Sure.
very different group of investors that are looking for different things. Some can't even invest in tokens, and some have no interest in investing in equity. So like being able to optimize for that, tailoring your pitch, like when you're in my world, is really important. And then being able to align, like you need to be able to align value accrual at both the token and the equity layer. Otherwise, people are going to see right through that and they're going to
Yeah.
smell bullshit. Um, I would say for any, like if I have to give advice for anyone who's going to launch a token, as part of a capital raise or part of their business model, like take that really really seriously because you're effectively going public from the minute you launch it. I mean, you're like you have a value in the market. You're priced. There's in some cases liquid markets, sometimes not as liquid. We're pretty liquid because we're on Binance, we're on big exchanges.
Yeah.
So that's like real money. Like our token is as good as cash to people. That's an important thing. But at the same time, you also have, you know, it's not like public in the sense of like doing an IPO and all the, reporting requirements, but you have basically, thousands of retail like end users who hold your token. And if the price goes down, like they're saying you're a scam. And if it goes up, you're the best thing in the world. So like just be ready for the craziness that brings and also the responsibility. Even if if it's not as regulated as it is in like public securities markets, like there is a responsibility to your token holders and your community, and you have to do the right thing. And I think crypto does get a bit of a bad rep just because people will launch tokens and founders will just move on. They'll do something, it'll deliver something halfway. Maybe it has some value accrual, they'll sell because you can get liquidity pretty quickly, and they'll move on to the next thing. And they made a lot of money, and then the community stuff's holding the bag. And like we could have easily left and just done something else, done a new token, done a new project if we wanted to. Like we're 4 years old now, which is almost an eternity in crypto world. And that's just like that I will like your name's on a token, my name is on this token. So in this project, I will ever be associated with it. And I take that very, very seriously. So if you're gonna be launching anything, like just you better be definitely serious about that because like it's your reputation on the line.
Yeah. And
And the internet does not forget.
I was going to actually say, I was lucky enough to have dinner last time you were in the United States with you, and it was just around the time when I had like just started understanding the dynamics around token fundraisers, and how if you're a
Mm,
good storyteller and you can craft things, like you can launch a token, you can make money,
yep,
and like you can walk away. I'm like, why doesn't everyone do this?
yeah.
Like why doesn't every founder who's raising a company for a traditional company attach a token and do this? Cause like I'm like, I could do this. Like I understand the dynamics
Mm,
around storytelling. And this was the
yep.
thing that you underlined, like triple underlined. You're like, and I don't
Yeah.
think you went into it as in depth. It's like, yeah, you go public, you're doxxed, people know who you are.
Yeah.
And it's a scary, I mean, the internet can be a scary place if they
Yes.
believe you're taking your money, right? And it's not
For
something to
sure.
take lightly, right?
100%.
Awesome.
100%.
The last thing I want to ask you, because like it's been fun to talk to founders, especially because I believe founders have the best deal flow. You all know
Mm,
other founders who are in the grind, and you can kind of see yourself in other founders, and you know who has the it factor more so than people that are further away from it, investors even. So love asking, are there any
mm.
founders in your orbit ecosystem names, either company names or founder names that we should be, keeping tabs on?
Yeah, so it's funny. I think my skill set, particularly like my general optimism for life and things. I was actually reading like a Mark Randolph tweet, like one of the founders of Netflix, and he was saying that same thing, like super optimistic, but it has actually made him not a great investor because he likes everything. I don't actually think I'm a great investor from that perspective. Like I will generally look at stuff and I'll be like, wow, I'm like, this is cool. Like they can make this work. And I naturally give people the benefit of the doubt from that perspective. So I don't have maybe as discerning of an eye from that perspective. Um, but one project that I think is pretty cool, run by a couple young guys, um, and they just raised a big round. They just raised like $38. I think it was led by Polychain, called Movement Labs.
Okay.
Um, so they're basically building like this like modular layer two solution that's bringing movement is a coding language, move, based out of like founded like by a lot of ex Facebook and Meta devs. The Move is this kind of interesting coding language that's newer, and they have this new virtual machine called Move VM that they're bringing to the Ethereum virtual machine.
Hmm.
So it's like this kind of interesting ability to bring Move coding language into Ethereum ecosystem, which I think is cool. And they've obviously raised a ton of money. They're like, I want to say they're like 22 and 26 or something like that. I met them actually like right when we saw each other last in February, in Los Altos, and super super polished young kids. Like they're legit. They're hustlers. Rushi and Cooper and Torab and the team. They're really legit. I think
Nice.
they're one of the bigger rounds that's been announced this year as well. I
It sounds like
expect pretty
sounds
big
like they've
things.
got a great story too,
Yeah,
which
definitely.
which
They're
helps.
cool. They're cool guys.
That was my conversation with John Patrick Mullin, otherwise known as JP, co-founder and CEO of Mantra, bringing the world's financial ecosystem on chain. I hope hearing JP's story reminds you of the power of staying the course, even when the market and timing aren't in your favor. When we come back, we'll hear my producer Paige's thoughts on our conversation. Like many of you, my last venture-backed startup was a SaaS business. In that company early on, we had the opportunity to sell into a large enterprise, but ran into some walls when they asked us if we were SOC 2 certified. Not only were we not certified, we also found out that it would take our small team a ton of time to get that done, and so we ended up abandoning the deal. If you haven't run into a situation like that where a potential customer or investor is asking if you're SOC 2, HIPAA, GDPR, or ISO 27001 certified, you probably will soon. But unlike me, you could use a company called Vanta to help. Vanta helps automate up to 90% of the compliance work, getting you audit ready in weeks rather than months, and eliminating up to 85% of the costs. Not only that, but Vanta can start small with you and scale up as you grow, helping you land bigger deals and earn customer trust. The best part is, Vanta is offering funded listeners $1,000 off for going to vanta.com/funded. That's VANTA.com/funded for $1,000 off your service. Check it out.
All right. Hello, Jason. This was a challenging episode terminology wise, because as you know, I know nothing about blockchain or crypto or any of that. But it was also cool because we kind of know a little bit more about JP's story. So it was cool to hear the whole thing kind of behind the scenes.
Yeah, I wouldn't feel too bad about the challenging terminology. It's like, as soon as we feel like we've gotten you comfortable, all of a sudden we're like crypto, Web3, blockchain. I'll just say this: it's like as similar as some of the fundraising motions are in that world. There are a ton of differences. The terminology is new to a lot of people, so don't feel too bad.
Yeah. And I was going to say, though, is like the theme and the things that he shared about the process of his fundraise was all the same. Even though he was dealing with like a little bit of a different world. So the first thing that I kind of wanted to talk about was that he raised this round, this $11 million venture round from a firm in Dubai. And
Mhm.
I don't know if it's any different, but I've heard in the past that, UK firms might be a little bit slower in their processes or are these different things that firms do depending on where they are. So I was curious if there's any like differences that you know of between the US and Dubai venture firms.
Yeah, I'm not super experienced, but a sovereign wealth fund, which is what he was raising fund from, I believe. Yeah,
Yeah.
um, it's a state-owned entity, so it's like a fund that is investing the money from a country, and a lot of times this happens because there are certain countries out there, like notable ones are Dubai and Norway, who have tons of revenue. Right? Revenue is like tax revenue, or because the state owns a natural resource. Like Norway's super natural resource rich, Dubai is super natural resource rich. They are making all this money, and it's all coming from one source. A lot of times, from what I know, these sovereign wealth funds will be heavily and highly aggressive towards technology because they're trying to shift the mix of where their country's revenue and wealth comes from. They don't want it
Mhm.
all to be pointed in one direction. So in some ways it could say that these funds will be a little bit more aggressive, a little bit more forward thinking when it comes to new technologies. There are a variety of other things that could be different, and I don't feel super comfortable speaking to that. But what I would say is, like, as always, whenever I'm telling people to get a little bit smarter about who they're raising capital from, kind of want to dig into what their motivations are, what are the main things that they're trying to get done, and it could come up with things that will indicate that they might behave a little bit more differently than what you're used to in your home country.
Okay, that's great because that was going to be my next question is what is a sovereign wealth fund?
Sure.
So thank you. That helps. He did say, by the way, too, that like the due diligence was a lot more intense. So that's why I was curious as well. And all of what you said makes sense to that point. Um, the funny thing that I also wanted to bring up, because back to my point of like, this really was just a regular round with all this crazy stuff that ends up coming together in the weirdest ways. So I really like noticed when he mentioned how he got introduced to this fund.
Sure.
And he was saying that like he got introduced by a friend that he's known for forever that he plays fantasy football with. And he was like, hey, I know you do this thing. You should talk to this guy. And um like, I just think that's so bizarre, like, how you could just and you talk about this a lot too, there's people in your network that you would just never assume, like, maybe they're just your casual friend, but they know someone who could potentially be the person who connects you with the firm that you close with.
Yeah, it's totally true, and, um, yeah, I just think, like, it says a lot. So the first thing you just said is worth calling out, which is, like, you just don't know who's connected to whom, right? And because of that, you have to be really aggressive at finding connections because, that's important.
Mhm.
Um, 2, like, I think there can be this perception of the sophistication of investing and, why all these things happen, but, like, at the end of the day, business and investing is all related to trust. And so any additional trust or any connection that you can get that inserts you into a fundraising process with additional credibility or additional belief and trust is going to be valuable for you. It might just be some guy that you play fantasy football with or
Yeah.
person that sat next to in stats class in undergrad, but that is still a meaningful difference than being a complete stranger. So yeah, it was very cool for him to share that. And I think the last thing I'd say is like, yeah, it does speak to how important it is to continue to build network in the least
Mhm.
G way possible, which is just meeting people, being a good hang, being a good person, trying to help people.
Yeah, and clearly, I mean, I hope if they're friends, he thinks he's a quality person, but clearly he thought he was a quality enough person to be like, I think like, because when you give an intro, you're kind of vouching for them.
Yeah.
So
You're investing social capital. You're putting your name on the line for sure.
yeah. And I mean, the bummer was, though, in this case, the first time around, they actually passed. Like, this was like 11 months before they closed their round. They were like, not it. And then the funniest thing that I wanted to bring up was that, and I feel like this always happens, he had been talking to another VC firm or whatever firm it was 11 months later and was just like, hey, by the way, he reached back out to Saruk Partners. And he was like, by the way, you're not the only person that's semi-interested, or said something, was just like, by the way, there's someone that's interested. And immediately they got back and hopped on a call and got back into this momentum, which is just goes to show because, and I wanted to mention this because I feel like we hear a lot of different founder stories. And usually when someone gets interested, I feel like the founder's immediate reaction is to focus and dial in on that one firm of interest. Whereas what JP did, which is really smart, he was like, let me literally reach out to the different people that I have talked to just to be like, hey, there's someone interested, which is like, it feels almost wrong because you just want to focus on that one person. But it's genius because you know how investors work. They're like, FOMO, I'm in.
Yeah, it's social proof. It's FOMO. It's getting validation from the market. It's showing a lack of interest. When the target shows a lack of interest in you, or when the founder shows a lack of interest in you, it's likely because they have other options. And things that have other options are more valuable. Things that have only one option, which is you, don't feel as valuable. And so, yeah, I think JP knew what he was doing. And then rewind it a little bit. I think it's really important for people to hear this message, which I know we've shared a little bit. Which is like a no now doesn't mean no forever, right? And taking a no, like respectfully maintaining a good relationship, and also being like, "Oh, if it's a no now, like whatever, I'm going to continue executing, putting up numbers, pushing my company forward, and keep you in the loop in the right way." And I think that vibe means that when someone hears a little bit more about you down the road, other people are interested, they're ready to re-engage. There's no ill will. There's no some feelings of weirdness. There's more of a feeling like, oh, I have an inside track here. I know more about this company. I've been tracking this company. I actually want to do this deal. So it was great.
And JP did mention, he's like, you never know exactly why a firm is going to pass. Like, it might be like something so specific, or like it's out of someone's control that wants to do the deal. Like, and then you don't know how things will change in the future. Maybe that partner goes to another firm. You don't know how things are going to happen. And I also wanted to call out too, like, this wasn't just like a breeze, the past few years in the crypto market, which I do know it's been bumpy. And like, as JP mentioned, when he was trying to raise back in 2022, Luna crashed. Everyone was like, turned their eyes away from any deal remotely related. And then when things were starting to get better, FTX crashed. And JP was sharing, he was like, we had to carry that for like 2 years. 2 years. Like, we had to bootstrap and figure stuff out. And I mean, if that doesn't show patience, I don't know what does. Because
yeah, and the strong survive, and especially in crypto, for the ones to be able to weather the storm of the bear market and make it to the other side, like it seems like he means that he gets to be one of those companies that have gone through it, that has raised capital, and now, entering into a pretty crazy bull market. Saw that, and this is already going to be outdated by the time we publish, but Bitcoin hitting 107,000. Not a small thing, for sure.
I mean, I'm out. That's all I got.
That was a great chat. I can't wait for future debriefs around crypto and other random things that get your head spinning.
Yes, hopefully I will know more by then.
If you're looking for more insights, strategies, and support around fundraising, subscribe to our newsletter. It's at fundedpod.com/newsletter. And find me on social. I'm at Jayeh, that's JAYYEH, on almost every platform. I respond to DMs and newsletter replies, so hit me up. This episode was produced by Paige Randall.
Hey guys.
Thanks also to John O'Lee from Adamant.
Hey, everyone.
And as always, one last thanks to our sponsor, Vanta, the leading automated security and compliance platform.